Today, I'm going to talk about journal preparation, posting to ledger, and balancing ledger. In this, first we'll be seeing about introduction, journal preparation, posting to ledger, balancing accounts, then conclusion. So, first we should know what is journal. Journal ends it records systematically and reports for the financial transactions. Like the key steps are journalizing, posting to ledger, balancing account. So it can be used to record, then classify, summarize financial transaction for the purpose of business decision making. So the key steps first I said journalizing. It is used for recording transaction as they occur. Then for posting to ledger, transferring recorded transactions to individual accounts. Then for balancing accounts, it is used for summarizing ledger accounts to prepare financial statements. Next, we'll see how we have to prepare a journal. First, it helps in tracking financial activities accurately, then ensures financial statements which are reliable and constant. Okay, so first we have to know what is the definition of journal. Journal is the first place where financial transactions are recorded in chronological order. First, the step for journal entry, we have to identify transaction. How we have to identify? First, we have to know, first, we have to understand the financial elements like sales, purchase, payments. Then, secondly, determine the accounts involved. Identify affected accounts, for example, cash, sales, rent. Okay, then how to apply debit and credit rules. Debit what comes in, credit what goes out based on accounting principles. Then fourth, record the transaction. We have to record the entire details such as date, amount, and a brief descriptions. First, they'll be giving, for example, when some regarding cash sales. A business receives rupees 3,000 from cash in sales. Okay, so in first column, you have to put the date. Okay, I'll show you the example of journal entry. How do we have to prepare the journal entry? First, we have in the first column, it I have given in the just points, bullet points, but in note system, we have to, or note or file, whatever it is, we have to first, in first column, we have to write date, then account, whether it is debit or credit. Okay, in third and fourth column, and fifth description. Okay, in the first, we have to write the date. For example, today, the date is 25 1 2025. In the cash amount, in account column, we have to put whether, for example, cash 3,000, it's given in the question. So a business receives 3,000 from sales in cash. So cash account to sales revenue is the journal entry. So cash is debit. So we have to put the cash amount in debit column. Sales revenue is credit. So the sales amount should be put in credit amount. So description is cash received from sales, revenue earned from sales. Okay, so this is how we have to enter the journals. Next, I'll teach you about the posting to ledger. How do we have to post the ledger? Posting is the process of transferring journal entries to individual ledger accounts for better tracking and summarization. For first step, we have to identify the ledger accounts affected. Then determine which account should be updated. Then post the debit and credit amounts. Update each account with the correct info. Third, cross-reference the entry. Add journal page numbers for tracking. Sorry. Then example for of posting cash sales to ledger. Cash account, like how we have to post the ledger. Okay, they have given already. We have already found out the journal entry. With that, we are going to post the ledger account. Next, these are the example of posting ledger. Next, balancing ledger posting. Balancing ensures that the ledger accounts show the correct financial position by calculating difference between debit and credits. We'll see the steps how to balance the ledger accounts. Calculate the total of debit and credit sides. Determine the balance carried down. We can write C/D as a short form and the period end. Bring down the balance brought down to the next accounting period. So I'll show you the example how to balance the ledger. First, we have to calculate total, then determine balance carried down, bring down the balance brought down. So these are the balancing ledger examples. To conclude, first, we saw about journal entries, how we should ensure systematic recording of transaction, then posting of ledger. It helps to track individuals' account balances, then balancing account. It ensures financial accuracy and readiness for uh, reporting. It allows the debit and credit. What are the key takeaways from this is it always allows the debit and credit rules and regularly have balances ledger to avoid mistakes. Then it provides accurate records help in financial decision making. So this is the purpose of using journal, then journal preparation, posting of ledger, then balancing ledger account. Thank you.